Do you agree with the OECD in terms of how Europe and peripheral Europe particularly is most vulnerable to the outcome of this crisis?
Sure. Laurence Boone, the chief economist of the OECD, is a very good economist and a dear friend of mine. And I think she's spot on. It really is a function of whether we see additional outbreaks in the third or fourth quarter. As I said earlier, the first wave is still occurring in the US. We still haven't crested in half the states. So if we do see some abatement of the crisis as we get into the third quarter, but then a resumption of caseloads in the fourth quarter, then I think that's a different story. We'll be back to some semblance of a lockdown back in the U.S. economy. I hope that's not the case. I hope her optimistic scenario is the one that comes to fruition. If that's the case, then 2021 will look much better. But we certainly won't be back to where we were in 2019 anytime soon.
Right, Tim, I want to pick up on one of the points that you've highlighted in your notes, which is essentially your economics team being more pessimistic than the Fed about the outlook for the jobs market in the US. Why is that? Because last week, the market rally, especially the last leg, was fueled on the basis of the fact that the jobs market seems to be giving us early signs of bottoming out.
Sure, it's the bricks and mortar aspect of the U.S. economy, and malls and other shopping centers in the U.S. have been under stress for many, many years, and this may be the coup de grace that really brings down many bricks and mortar businesses. There's some forecast that maybe as many as 25% of the restaurants across the country won't reopen. So I think there's large segments of the U.S. economy that will probably go through insolvency and really won't return to anything resembling 2019. Maybe not ever. I think it's a real transformation of the U.S. economy.
Tim, regarding the markets and the recovery for the markets, you're looking at something more to do with the zigzag kind of recovery shape. And given the disconnect we've seen between markets and economic reality recently, isn't there more opportunity for soaring rallies?
Oh, I think we've got more volatility, but I do think it is a zigzag. We've seen this mass rush back out to, we're seeing the lifting of some of the restrictions. People are rushing back out to the marketplaces. Beaches are filling up. But I think that's a first order effect. I think we'll see in the coming weeks that there's a resumption of caseloads. People will begin to draw back. And then there's issues such as just getting on an airplane. What does the transportation travel industry look like? Getting back on cruise ships, going back into malls. That's going to take a very long time. So it will be jagged. It will be erratic. And with that will come volatility.